Hello, this is Kingshuk Malik from jagoinvestor.com, and today I will be speaking about 5 major reasons for disputes and claim rejection in health insurance sector. An insurance company can entertain your claim post rejection, but for that you will need to convince the insurer that the claim was genuine. But before that you will need to know why it was rejected and then take the corrective measures. So let's elaborate on the 5 reasons why claims can be rejected.
Number 1. Proportionate deductions.
Sometimes it happens that you choose a hospital room that has a higher rent than what is actually written on your health insurance policy. In this case, proportionate deduction happens. It simply means that the differentiable amount between the room that has been selected by you and that has been already mentioned in your health insurance policy gets deducted from all the other expenses as well in the same proportion.
For example, if you were eligible for a rupees 5000 per day room and if you choose rupees 10,000 room, then the proportionate deduction will be applied for your entire bill, not just the room rent part. Here, the deductible amount is 50% of the room rent. So if the entire bill is for rupees 10 lakhs, you will just get paid 50% of it, which is 5 lakhs in claims. Number 2, not disclosing pre-existing illness. While taking health insurance, sometimes you ignore small details about your health. A big reason for many claims disputes is when your claim is rejected or partially paid because you didn't mention some past illness, surgery, or issues that you had.
A lot of people feel that only some recent surgeries or a big illness has to be disclosed while buying a health insurance. But the truth is that you will need to share the smallest of details. That small surgery you took 20 years back, that 2 months of medication for hypertension that went through a long time ago, some illness which has been cured long back. Everything matters simply because this data is used by the insurance companies to gauge the risk factor.
Number 3, reasonable and customary changes. Insurers will not always accept any amount of bill which the hospital charges. It should be close to the charges of other hospitals of the same nature in a given location.
So, if a surgery costs rupees 2 lakh on average, then the company will not pay if you go to a hospital that charges you 10 lakhs for the same surgery. So, you need to be very mindful about these things so that the hospital doesn't overcharge you.
Number 4, no coverage for consumables.
There are various small things that are required in medication or surgery, which should technically be part of the room rent or the surgery cost. But hospitals still charge many of these separately. These are consumables.
Insurance companies don't pay for consumables separately as they consider them as inclusive of the hospital packages. Masks, gloves, cleaning kits, crepe bandages, cotton rolls, etc. fall under the category of consumables. Number 5, unnecessary hospitalization.
Until there is an active line of treatment at the hospital that is really needed, it will not be considered as a claim.
Sometimes people get admitted to the hospital just to avoid any kind of health risks. That is not considered a treatment, and insurance companies will not pay for that.
Now, here is a bonus tip for you. Always remember the PRR principle: prescription, receipt, and report.
Never forget to ask for a prescription, a dated receipt, and a report. Always remember that these three things must be submitted to the insurance company to claim the money.
I hope you have learned something new today from this video. If it was helpful, do share it with your friends and don't forget to subscribe our channel. See you next time.